Welcome to this session on free money. Yes, you heard me right. Free money with a question mark. Let's find out what the catch is. My name is Tiffany Hayes. I'm with Tiffany Hayes Real Estate Group. My goal is to help you make a smarter home buying decision. We're going to take a look at 5 ways to get money to close, the 4 types of down payment assistance, no and low money down loans, and down payment assistance programs. So first things first, let's talk money to close. There's 5 different ways that you can get money to close. So we all know you're going to need some type of money when you're going to purchase a home. Now, there are those buyers who end up getting a refund at the closing table, and that does happen. But for most of us, we need to be prepared with money to have when we close in our home. Everyone's situation is different. Before we jump into that, this is a brief recap on the money that you will need when you purchase a home, the cost of home ownership. So very briefly, upfront cost, closing cost, hidden cost. Your upfront cost is your earnest money. And of course, that's the money that you use to show the seller how serious you are in purchasing their home. Typically, that's 1% of the purchase price, but that is a negotiable amount. You have your option money that you're going to pay to give you opportunity to thoroughly inspect the house and just think about that purchase. Your inspection and your appraisal, which are both determined by the square footage and location of the home. Your closing cost, that's the big one. Your down payment is going to depend on the type of loan that you are getting from the lender. The prepaid cost will be something like your mortgage insurance premiums, your taxes, your homeowner's insurance, etc. Lender fees, again, because they're not doing this for free. And your title company and attorney fees, again, because they're not doing this for free. And then there are the hidden costs of home ownership that a lot of people just don't think about. Your private mortgage insurance, if you're paying less than 20% in down payment. Homeowner's insurance, which is a cost that you can control because you can decide what level of insurance you want. Your property taxes are determined by location and neighborhood. The maintenance on your home, how much repairs are going to have to be done. The home warranty, which is up to you, but it's something that I do recommend to help you cover at least the systems in your homes and the appliances in your home. And then there's the Homeowners Association, otherwise known as the HOA, if you move into a neighborhood with the Homeowners Association. Be mindful of these expenses with owning a home. Now, to what you wanted to know, 5 ways to get money to close. Seller's concessions. That means that the seller of the home is contributing money towards your closing cost. That could come up just because either A, you need it, or maybe there's some repair work that needs to be done. There's a number of ways, and this is a realtor question, but there's a number of ways that you can negotiate seller concessions. Each person's contract may be different. Their retirement funds. You can take money out of your retirement account, although that may not be the best strategy. There are people who do it, but that should be evaluated on a case-by-case scenario. Lender credit. The lender themselves contribute a certain amount to your closing cost. But again, I say nobody's doing this for free. If they contribute money, that may come at a higher interest rate to you on your loan. Borrowing from friends and family. Maybe Uncle Joe or your parents are willing to help you purchase this home. They can actually gift you money to help with your down payment. But just be mindful that that gift money is going to have to be tracked. They'll probably have to write a letter saying that they're actually giving you this money. It doesn't have to be repaired, etc. But that's a lender question and how to handle that gift funds from friends or family. Then there are what we're going to cover in this session, federal, state, and local programs available to assist you with down payment and closing costs. So specifically, down payment assistance, there's 4 different types, but mainly there's free money, which are grants, and then the type of money you have to pay back. loans. Let's look at how these break down. The first column is the loan column, and that is financing above and beyond your primary mortgage. So say your home is $100,000 and you take out an $80,000 loan with the lender and another $20,000 loan to help make up the difference. That loan will be paid down in parallel with your main mortgage. So you're just looking at two different loans to buy that home essentially. The second column is a deferred loan, loans with deferred payments, which means you're not necessarily making any payments on that loan, but it would have to be repaid in full when you move, sell, or refinance your home. Or if you finish paying down your first mortgage, that loan will need to be paid off. So what that looks like is that you take out a mortgage to purchase your home. You also take out a second loan, maybe to pay for down payment. But if it's a deferred loan, you're not making any payments on that second loan unless you have one of those trigger move, selling, or refinancing your home. Under the third column, there's what is considered a forgivable loan. These loans are forgiven over a set number of years. So for example, say you take out a $10,000 loan for a down payment, and it's a forgivable loan. That means that, hypothetically speaking, over the next 5 years, that loan could be forgiven at like 20% each year. So after your first full year in the house, they could forgive $2,000 of that loan, and you would only owe $8,000. Live in the house for 2 years, they would have forgiven $4,000. Live in the house for 3 years, they'd forgive $6,000. You get it. A forgivable loan means that there's a set number of years that you take out the loan for, and that a certain percentage of that amount is forgiven each year you stay in the home. Now, there are trigger events. If you move before that time period is up, if you move, sell, or refinance, or finish down paying your first mortgage before that loan period is up, then you're going to need to pay it back, the amount that has not been forgiven. Now, on to our free option, and I say free in quotation marks, are the grants, which are essentially gifts that never have to be repaid. And I'll show you an example of that a little later in this session. Now, some grants are just free and clear. You don't have to worry about repaying them. There are, however, some programs that will make you pay a slightly higher mortgage rate to cover the cost, and we'll review an example of that as well a little later. Now, very quickly, where does down payment assistance come from? The federal government does not provide down payment grants to individuals. Instead, the Department of Housing and Urban Development, otherwise known as HUD, allocates money to states, and funds are awarded to qualified buyers at the local level. So you can actually check out HUD's website yourself for all the different down payment assistance programs. But in general, the federal government, HUD, hands that money down to the state hands it to the county hands it down to the city. And of course, there are some nonprofit programs who may have funds available for down payment assistance, but a lot of those may get that through an allocation from the city. All right, here we're going to go for a deep dive into mortgage loans and the down payment assistance programs that coincide with them. Specifically, we're going to take a look at some no and low down payment loan types. Let me first say this, that before you can qualify for down payment assistance, you must be able to qualify for the loan with your lender first. So there's a two-part qualification. Number one, be able to qualify for your mortgage loan with the lender. And then you can look at, do you qualify for down payment assistance? Because most programs require you to be approved by a lender first. We're going to take a quick look at different loan types. Yes, this is a deep dive, but we're going to go through it very quickly. We're going to look at FHA, conventional, VA, USDA, jumbo loans, renovation loans, and special programs. Here we go. FHA is through the Federal Housing Administration. That means that loan is backed by the government. That makes banks and other lenders feel more comfortable lending to you, because if for any reason you default on that loan, the federal government is going to make that payment for you and pay the lender off. Now, those down payments can be as low as 3.5%. The minimum FICO score, credit score, is a 580. However, there are some programs that will go down as low as 500 if you have the right down payment. These do involve maximum loan limitations, meaning you can't go out and buy $1 million property with an FHA loan. There are maximum loan limitations, and I think in the Dallas area, it's like 480 something thousand. Don't quote me on that. That's a lender question, but that's a pretty generous amount for a loan limitation for FHA. Now, here's the part where it gets a little bit tricky. It all sounds good up until this point, but with an FHA loan, it does involve mortgage insurance premium. As I've stated in previous sessions and previous videos, if you're going to put down a down payment that is less than 20% of the purchase price, it will involve mortgage insurance. In the case of an FHA loan, you're only putting down 3.5%, which means that the lender is taking on 96.5% of the risk. So you will have to pay an additional insurance premium above your mortgage principal in order to secure that loan. And that doesn't go away. You're going to be paying that for the life of the loan. If you're taking this loan out after 2013, you will be paying that mortgage insurance premium for the lifetime of the loan for an FHA loan. And of course, yes, you can use gift funds from family and friends for an FHA loan. There is another loan called the Home Ready loan that started in December of 2015. It is also backed by the government via Fannie Mae and Freddie Mac. And discussing those entities is beyond the scope of this video, but I'd be happy to answer those questions for you offline. Now, this Home Ready loan specifically targets households in lower income neighborhoods and in minority heavy areas. But the down payment, get this, can be as low as 3%. But you need to have a FICO credit score of at least 620. Now, let me pause to say the FICO credit score is not your Credit Karma credit score. Two different things. Credit Karma is great to be used to monitor if your credit is fluctuating up and down and to monitor your report. But when it's time to apply for a mortgage loan, you need to get your FICO score from your mortgage lender. Now, I just had to get that out. The Home Ready loan does have income limitations. That will be a lender question. The great thing is that it does provide income pooling for all the members of the household. They can lump their income together and use that to qualify for the loan. Also, it does allow the use of non-traditional trade lines of credit to establish credit history. So, do you pay your phone bill on time? How about your child care payments to the daycare? Are you paying those on time? That's a lender question as to what non-traditional trade lines are acceptable, but just know that that is available to you. Now, your mortgage insurance premium can actually go away. You heard me mention with the FHA loan that you are stuck with that mortgage insurance premium for the lifetime of the loan. With the Home Ready loan, you are not. Once 20% of that purchase price is paid off, or up to 78% to 80%, again, that's a lender question. But once that amount of the loan is paid off, that mortgage insurance premium can go away. Yes, you can borrow money from friends and family in the form of, not borrow money, it actually has to be given to you as gift funds, but you can get gift funds from friends and family. You also must take a homeowner's counseling course. Conventional loans, those down payments can be between 5% and 20%. you need to speak with your lender about those amounts because different lenders have different programs. But in general, conventional loans take between 5 to 20% of down payment. Your minimum FICO score is 620. There will be no mortgage insurance for loans with down payments of at least 20%. But if you do a down payment of less than 20%, that mortgage insurance will be able to fall off of your loan once you've paid down the first 20% of your loan. Again, that's a lender question for clarification. Your conventional loans can be conforming. That means they meet Fannie Mae or Freddie Mac's guidelines, or non-conforming. Non-conforming loans accept a wider range of criteria, but come with a higher interest rate. There's a special conventional loan called the Conventional 97 that requires a 3% down payment. You can accept gift funds as down payment from friends or family. It does not require upfront mortgage insurance premium. As you've heard me mention before, when you're putting down less than 20% for down payment, the lender is at greater risk for lending to you because you don't have a lot of skin in the game. And a lot of those loans that I've mentioned before will require a lump sum paid upfront at closing of that mortgage insurance premium, and then you will be paying monthly mortgage insurance premium lumped in with your mortgage payment. With this particular loan product, there is no upfront mortgage insurance premium at the closing table. That's good news. However, the annual mortgage insurance rates are cheaper. The loan is capped at $484,350. It does require that all borrowers carry mortgage insurance. Your minimum FICO score is 680. And again, there's no upfront mortgage insurance premium, only monthly payouts until you reach 80% of loan to value. The Veterans Administration, if you served in the military, you should qualify for a VA loan. No down payment. That is great news. There is no down payment. You get 100% loan financing. If you're going to buy a $200,000 home, 100% of that loan is financed by the lender. The mortgage rates are going to be lower. That's a good thing. There is no private mortgage insurance. That's a good thing. The thing is, though, there's always a catch. It does require a one-time guarantee fee or funding fee paid to the Veterans Administration. So while there is no down payment, you will get a better interest rate, etc. There is a one-time fee that you'll have to pay, but that could be rolled into the loan. Again, that's a lender question. The great thing about the VA loan is that this is a reusable benefit. If you buy a home and you pay it off and you want to buy another home, or you sell that one and want to buy another home, you can reuse your VA benefit again as many times as you can. All right, the United States Department of Agriculture, otherwise known as the USDA loan. This is a good loan that not a lot of people know about or even consider. It's another loan that is backed by the government. It does involve income limits that vary by location. You have to have at least a 620 credit score. But the great thing is there's no down payment required up to the appraised value, and county maximum loan limit is not exceeded. So where you choose to buy a home needs to be in what is considered a rural area. Now, sometimes you will be surprised, and for those of you who live in Dallas County and you know where Glen Heights is, or Wilmer or Hutchins is, or portions of Seagoville, some of these places are considered rural. And they don't necessarily look rural, but they're considered rural on the USDA map. And you can, if you purchase a home in those areas, you could qualify for a USDA loan and get no down payment. A low flat interest rate, usually lower than market rates. You will have to pay mortgage insurance, but hey, getting into the home will be less of a hassle. Now, this is a realtor question. and a lender question. But as you're searching for a home, you can say, hey, I'm interested in this particular address or in this particular neighborhood. Can you show me if this neighborhood is in the targeted area for USDA loans? Because if it is, welcome to no down payment. That's a beautiful thing. Jumbo loans. Conventional jumbo loans are available for primary residences, which means you have to live there, second or vacation homes, and investment properties. So it's a good thing. Conforming loan limits may vary by county. What is considered by a jumbo loan will vary by county. It will likely have a higher interest rate and will likely have a higher down payment. Very quickly, a jumbo loan just means it's a more expensive home. It may be something like $500,000 or $600,000 or $700,000 or more. It's going to vary by location. So that is a lender question as to whether or not you're going to need a jumbo loan. Renovation loans. If you are one of those HGTV buyers who want to fix up on a house, you can research lenders and see who may have a renovation loan where you're able to purchase that home and lump in the renovation amount into that purchase price. So into that loan. The loan products will vary by lender. They will typically be a conventional loan, although some lenders very sparsely. I've come across maybe one that has a conventional loan for a VA buyer. But some of the more popular renovation loans is the FHA 203K loan for financing renovations over $35,000, or the FHA 203K Streamlined for financing renovations under $35,000. And again, I mentioned some lenders may have a VA renovation loan. That's a realtor and a lender question. Last but not least, there are special programs for buying a home. Sometimes there are situations where people just have a hard time getting money together to qualify to buy a home. And if that is the case for you, there are special programs. Good Neighbor Next Door is a HUD program that can offer up to 50% off the purchase price of a home. Now, there are restrictions that apply. Restrictions that go something a little bit like this. There are certain areas and neighborhoods of town that they would love for first responders and teachers and people like that to move into, to be good citizens in those areas. And they are willing to provide an incentive of up to 50% off the purchase price if you are a good neighbor and want to move into those areas. Other special programs are found at the state, county, and city websites where there's a down payment and closing cost programs to help. And then there are nonprofit community development corporation housing programs. That's a realtor question that you can ask your realtor to help you research what other nonprofit CDCs may be out there that are building in neighborhoods where you can buy a home for a much smaller amount than you would typically have to purchase a home for. And again, I have a few of those resources available for certain buyers. Getting down to business and getting back to this free money, you need to know if down payment assistance is right for you. And so here are a few questions that you'll want to ask. Will the interest rate on my home be lower if I use the money I've saved to cover my down payment and closing costs? You'll want to compare interest rates on the loan with down payment assistance and without down payment assistance. Is the down payment assistance in the form of a grant, free money, or a loan, money that has to be paid back? And then is it a deferred or forgivable loan? Does the down payment assistance have to be repaid? How will the down payment assistance affect me if I decide to sell my home or refinance my loan? Are those trigger events where it all has to be repaid back? These are all the questions that you'll want to ask before accepting down payment assistance. I want to show you a few quick examples from TSHAC and the Dallas UpCap program. Now, there's a lot more programs out there, but this will help jumpstart you into what down payment assistance could look like for you. All right, I am on the website for the Texas State Affordable Housing Corporation, otherwise known as TSHAC. Now, TSHAC has a couple of special programs for down payment assistance to help get buyers in homes. The first one that I want to show you is Homes for Texas Heroes Home Loan Program. This is for teachers, firefighters, emergency personnel, police and correctional officers, and veterans. You'll see they kind of have this cute graphic that lets you know if you are one of these professions, then you qualify for a special program. The program benefits: you can get a 30-year fixed rate mortgage loan, and it all depends on how much down payment assistance you accept, because they will give you anywhere between 2% to 5% of the loan amount. So, for example, if you're going to purchase a $100,000 home, you can get up to 5% of $100,000, which will be $5,000 towards your down payment and closing costs. And again, you do not have to take the full 5%. You could take only 2% or 4% or 3%, but your interest rate will vary according to the amount of down payment assistance you provide or that you accept. You do not have to be a first-time home buyer. You will have to work with a lender that has this TSHAC program available. Not all lenders do, so you will have to work with a participating lender, but it is a pretty popular program, so a lot of lenders do participate. And the income limit for the home that you choose is going to fall within certain, there's going to be income limits, but the income limits are pretty generous, to be quite honest. This is a great option if you make a pretty decent salary or a substantial amount of money for the job that you do. You can still receive down payment assistance, but they will max you out at a certain amount. But this is good news for my buyers who do make a little bit of money, but they don't quite have enough saved up to purchase a home. It's a great option. All right, I want to back out and go to the Home Sweet Texas Home Loan Program. And again, this is specifically for Texans with low to moderate income. It is still a 30-year fixed rate mortgage loan. You can receive up to 5% of the loan amount. This can be in the form of a grant that never needs to be repaid, or a forgivable second lien loan. And so you will want to have your lender evaluate what is the most cost-effective option for you. Should you take out the forgivable loan down payment assistance, or should you go with just the grant? Because those interest rates will vary. The amount of down payment assistance you choose to receive will directly impact your interest rate. You do not have to be a first-time home buyer for this loan program. And again, the income limits are a lot higher for this loan program than several of the other loan programs that you may be exposed to. So that's good news. Secondly, I am on Dallas County's website, and I want to expose you to the Upfront Cost Assistance Program, otherwise known as UpCap. This is a different type of loan program offered by the county. And here's the information about it. You can receive up to $7,500 for down payment assistance and closing costs and prepaid costs You have to be a first-time home buyer. $7,500 is nothing to sneeze at. It is free money, but you do have to qualify. You have to be pre-qualified from a lender, first and foremost. So you can't even start this program until the lender has given you a pre-approval letter. You have to live in one of these territories: Balk Springs, Cedar Hill, Cockrell Hill, Capel, Duncanville, Farmers Branch, Glen Heights, Hutchins, Lancaster, Saxe, Siegelville, Wilmer. This is a pretty generous sprinkling of areas to live in, but you have to be in one of the 12 participating cities, or you have to live in an unincorporated area of Dallas County. So you'll want to check specifically if you want to use this program, you're going to have to check with the phone number for this program to see if your home qualifies. Also, there are income limits. A family size of 1 can make no more than $46,000. A family size of 8 can make no more than $87,800. You can read through this on your own, but you'll want to go to the Dallas County website, look for homebuyer programs, and navigate to the program for UpCap. So as you can see, you have a big decision to make. There are a number of down payment assistance programs and a variety of loan types that you can choose from. And it's a great question and discussion to have with your realtor and your lender. I hope you found this information helpful and useful. Again, my name is Tiffany Hayes with Tiffany Hayes Real Estate Group. My goal is to help you make a smarter home buying decision.